gonna get started right now. Okay. So guys, today is going to be mainly about correlation. All right. Right. I want you guys to understand the relationships between some of these currencies and what they have with each other, what they share. Okay. So one of the first things that I'm going to do, let me see. I'm going to actually pull up a world map. Okay. Because I know not everyone is good with geography. There's nothing wrong with that. But for the sake of what I'm trying to tell you guys, I need to show you what I'm talking about. This should be good, I guess. Oh, I got some trend lines on this world map. I don't need no trend lines. Naked world maps, guys. Naked world maps. All my charts are naked. Okay, everybody can see my screen, correct? Oh, Berto, okay. Damn, that's what I look like from the back. All right. So for correlations, guys, can I write on this? I believe so. Yes, I can. All right, cool. Text. All right, so currency pairs. We're going to go over correlation according to time zone first and foremost, so you guys can understand what currency pairs you're trading during what times. All right. So if you guys don't know the time zones, there are 4 main sessions in Forex. All right. There's New York session. There's Tokyo or Asian session. There's London session. And then, what was the other one again? Tokyo. Is it Sydney and Tokyo in the same?
No, it's Sydney first, Tokyo, London, New York.
Okay, Sydney first, Tokyo, then New York. Okay, because if you look at the map, Australia is right above Japan. I don't know why they have different time sessions, but, you know, to each their own, I guess. I don't really trade according to sessions, but I am knowledgeable about when the sessions are happening. So that's just something to keep in mind. And the main reason I don't trade according to session is because if you guys haven't heard me and Jesse say it a million times, I only trade when I see a setup. I don't care what time it is. I don't care what the currency pair is. Any of that, just for a separate note. You guys don't have to be like this until you get a certain level of comfortability, but you generally should not really care about any of that. You trade when you see a setup in the markets, okay? But besides that, the main pairs we got going on over here, USD and CAD. Whoa. Let me do, can I put background? No, I can't. Okay, that's fine. Can everybody see the USD CAD? Because I know. Right.
I can see it.
Yeah?
Yeah.
This may not have been the best example. Okay, so the main things that happen during the New York session, the main 2 currency pairs that get traded during that session is obviously the USD and the CAD pairs. Okay, this is what happens over here. So generally those move around, I think New York session starts at 7 in the morning Eastern Standard Time and ends around 4 or 5 p.m. Eastern Standard Time, if I'm not mistaken. So when you see during those times, right, obviously you have to translate it to whatever time session you guys are in, and you'll be able to know that USD and CAD pairs move the most around that time. Those pairs are correlated. So the main reason why like UCAD moves like a lot compared to, you know, UJ or UChief is because, that's what I call it, UChief. That's the Swiss franc, by the way. CHF is what I call chief. And so the USD CAD will move the most because these pairs move at the same time. Okay, they're based off the same markets. Canada's markets are like literally right next door. It's right across the Niagara Falls. So it stands to reason that the USD CAD and those pairs will move around the same time frames every day. Okay, then we have 3 more currencies that move around the same time every day. Those are the Europe currencies. All right, does anybody know those 3? Anybody want to list them out for me?
Euro, GBP, and NZD.
NZD?
No, that's in the other side. Sorry.
You got it. Come on.
Hold on, I don't want to watch anything.
Anybody else? Anybody want to help him? What's that last currency that happens in Europe?
CHF.
There we go. Arthur, Isabel got it. Perfect. Oh, you guys are not fair. You guys come from Europe. But yeah, so Euro, GBP, and Swiss franc. These all move around the same time. Oh, damn.
He said, oh, wow. Starters coming back in style, though.
All right, so Euro, GBP, and the Swiss franc all move around the same time. Now, this is during London session, guys. So London session for us people on the eastern seaboard of the United States, that is around, I think it's like 2 a.m. Eastern Standard Time till about, I think it's like 10 or 11 in the morning, 10 or 11 a.m. in our time. You'll actually see the time sessions in a bit. I'll share a nice little picture for it so you guys can see. But generally, the euro, the GBP, and the Swiss franc pairs generally move around the same time, okay? Now we have the last two. All right, now who knows what's going on over here during Tokyo session? What pair is there? We got 3 currencies that happen around the Tokyo/Sydney session. JPY, main one, of course, Japanese yen. Hi, Catalina. JPY, AUD, and NZD, okay? So you guys can generally mix or match the Tokyo and the Asian session, or the Australian session, if you will, because they happen around the same time. I think there's only like a few hours difference, like maybe 1 or 2. But the main reason why is because Japan is right above here, and Australia and New Zealand are down here, okay? Actually, I don't think New Zealand's on this map because it got cut off, but New Zealand is actually below Australia to the right, okay? It's kind of cut off of the map. But so these 3 pairs also move around the same time. These 3 are also correlated, okay? So if you notice, wait, hold on, why do I feel like we're missing one? USD CAD, Euro, GBP, CHF, JPY, AUD, NZD. No, we got them all, right? That's all the pairs? Tripping, yeah, main 7. All right. So these are the way that they work in terms of time zones, okay? These all work differently. So if you notice, sometimes like, for example, Dr. K, she'll post Euro USD buy, and she'll shortly after put GBP USD buy. The main reason why is not because, you know, Euro and GBP are twins, okay? They're moving around the same time session, okay? The people in Europe, in the Great Britain or London or whatever, in Switzerland, which is where the franc comes from, all of those people are literally waking up and going to work and moving the money in the banks at the same time. Those are the reason those pairs move around the same time, okay? So although they do move around the same time, they're not exactly, you know, perfectly identical. Just because you're buying Euro USD, you can't always buy GBP USD, which comes into the correlation part. So let me get out of here, mouse. All right. No, yeah, whoever screenshotted it, very smart. No, if not, get a world map. Just kind of like search up the countries that you guys know for the currencies, and you'll be able to find them. So if you guys don't have them already, all right, all serious traders, all professional traders, whether you want to share them or not is up to you. I don't always share all of my FX books, but this is my FX book, okay? This is a website that I like to use. You link your broker account to this, right? And this allows you to monitor your account. It gives you the full statistics of it. How many shorts do you win? Or how many sells do you win, okay? How many longs do you win? How many buys that you win, all right? How many pips do you averagely catch? What is the average percentage per trade that you make back on your account? It tells you all of these facts. So if you guys don't have a MyFX book, I would highly, highly encourage you to get a MyFX book. Okay, and MyFX book is also very cool for besides the fact that it helps you monitor your account, keep you very organized with your trading plan and stuff like that. It has a lot of calculators that I like to use. Okay, you guys are not aware of yet. Hold on, before I get into the actual correlation nuggets, I'm gonna drop one more nugget right here. Okay, these are some of the Forex calculator that MyFX book offers. All right, so it allows you to actually calculate Fibonacci retracements and extensions based off of the highs, the lows, and what's known as a custom value, aka the current price. Okay, so you guys can check out Fibonacci ratios and extensions that are not normally available on your MetaTrader or on your TradingView settings. Okay, so if you guys are not fully familiar with how Fibonacci's work or how to measure them properly, use the Fibonacci calculator on MyFX book. Very, very helpful. Okay, we also have a margin calculator, so you guys can actually start monitoring how much margin you have per trade. You guys could be able to take your trading risk management and risk appetites at the next level. You'll be able to monitor your equity, your balances, all of that. If you guys don't know what these terms are, I don't even know why you're on this Zoom, okay? I'm not gonna out here to explain leverage or margin or equity either. So you guys do need to understand that as well. All right, pip calculator, it even lets you count the pips in different account types. All right, so you guys can talk about different lot sizes. If you didn't know this by now, every pair pays you differently. You'll get less money on GBP AUD and the same lot size as you will Euro USD. And it's not just because of spread, okay? Each pip weighs a different amount. So if you guys don't know that already, each currency pair pays you also differently. So that's why the pip calculator is very important. It also accounts for the different currency pairs. You just have to put it into the calculator, all right? Same thing with pivot points. If you guys are not familiar with pivot points, that's a technique used based off of different times. And there's different types of pivot points. As you can see here, there's 4. There's a floor, a woody, a camarilla, and a demarc. I'm not an expert at pivot points. That'd probably be best for another Zoom call if you guys are interested in that. But I don't really necessarily use them. All right, but the calculator is available for you to use if that is part of your confirmation checklist, okay? But the main calculator that I love right here, position size calculator, okay? It allows you to check your currency pair, your risk level in terms of percentage or money, and your stop loss in pips, okay? It'll calculate your lot sizes, it'll calculate your account balance, and all that stuff. This will allow you to never over leverage, okay? And if you guys don't know, I understand some of you guys need bills to pay and stuff like that. You don't need to over leverage to pay your bills. You guys need to learn how to compound your account and do so consistently month in and month out, all right? So I don't want to see anybody, I don't care if you made 100K this year because you had very good beginner's luck the first 6 months. If you're not consistently profitable 9 years from now, assuming you're still trading, then you didn't really learn anything in your 9 years of trading. All you did was make a lot and spend a lot, okay? So if you guys are not consistently, compounding your accounts and taking out that money and withdrawing and using that stuff to, pay bills or whatever, then I would definitely encourage doing so. And I definitely also encourage having more than one account, okay? One should be for your compounding, okay? Another one should be to pay your bills, and then a third, fourth, fifth one, whatever, for whatever other purpose. But you should definitely have a bills account separate from your compounding account. You should not be paying your bills with the goals with your retirement fund. Just doesn't make sense, okay? So just keep that in mind, all right? But the whole thing I brought this up is because MyFX book, very, very helpful, all right? So if you go into MyFX book, right, and you go to the market section, you can click the correlation tab, right? When you go to the correlation tab, it'll bring you to this beautiful page right here. And as you see right here, it has almost every pair, okay, including futures. See, AUS 200. This is the future for the Australian dollar. So if you guys are into trading futures, this will also help you with that. You can change the pairs however you want. You click where it says more. Look how many options we have. You can trade exotics with correlations if you really want to. It's all about what you're into. I don't encourage, I know a lot of you guys are still, beginning, intermediate. Don't, have everything clicked off just for the sake of, having information overload. Only use the currency pairs you're actually watching. Who cares about the currency correlation between USD, Norwegian krone to the AUS 600? I don't. I don't know why you should, to be real. You know what I'm saying? So just keep that in mind that less is more, all right? So I'm going to edit some of this right now so it's a little bit more clean. I'm going to keep just the main pair. So I'm going to add only 10 symbols can be compared at a time. All right, that's fine. We're going to take out COTTON, GBP NOK, Hong Kong 5.0, UK 100. You see, you don't need to, you could just remove all this, all right? So for the sake of just doing it really quickly, I'm just going to go right through without saying them all out loud. But the main reason these things are very cool is because these percentages tell you the relations between currency pairs, all right? And I'm going to tell you the difference between a negative and a positively correlated pair. There's a difference, okay? You guys need to know negative and positive correlations. All right, so I'm getting rid of all of the extra ones. There's even some metals you can trade if you're really into it. Like I was just talking to my friend about palladium, but, up to you, XMG. If it has an X in front of it, by the way, guys, it's an element. So that's why XAU is a thing. It's X for metal, okay? And AU means auto or gold in Latin. Just so you guys know the meanings behind some of these tickers. XAG, silver. AG, I don't know forgot how you say silver in Latin, but just know AG is short for silver in Latin. Or ancient Greek, I'm sorry, I think it's ancient Greek if I'm not mistaken. All right, so we're almost done. Sorry, guys. Now, example, XPT. PT is platinum. X means it's the metal. Okay? You could trade sugar. I was just actually talking to somebody. Somebody asked me what pairs I keep an eye out for. I also trade soybeans. All right? I have to call you back, my brother. All right, so there you go. I cleaned it up a little bit. Everything looks good now. More, boom. All right, so there you go. Now we got some correlations already up right here, right? So for example, the way that we read this is the currency that you're mainly paying attention to, the one on the top. This is your row currency, different than your column currency, okay? So for example, as you can see, AUD CAD is going to be related to AUD CAD positively 100%, okay? But also AUD JPY and AUD CAD have an 89.7% positive correlation. As you see, some of these numbers have a negative, okay? So I'm going to go to a whiteboard so I can explain the difference between a positive and a negative. All right. So for example, if we have AUD, what was it, AUD CAD and AUD, somebody, I hear myself. All right, so we have, what's it called, 89% correlation, was it? Positive? So what that means, positive correlation, equals they move the same way, okay? That means same direction. So for example, if AUD CAD is bullish, no numbers or anything like that, what can we expect AUD JPY to be? Lucas, I saw you mouth word bullish. If everyone did not guess bullish, then I don't know any other way to word it except for the fact that positive correlation means same direction. Okay, the reason why these things are so important, so if you know AUD CAD is going down, for example, it's actually bearish. So let me change this because AUD CAD currently is bearish. I'm actually selling AUD CAD currently. It's the main reason I know that it's bearish. But we have an 89.7% chance AUD JPY also bearish. This is what correlation kind of means, okay? Let's go back to the other page. We have it over here. Let me bring this up. Boom, AUD JPY, positive correlation. So new share, FX correlation. All right, so we see it right here, 89.7%. AUD JPY, AUD CAD move the same. Okay, so if you traded AUD CAD short, you can, if you're comfortable with it, 7 minutes left. Oh, snap. It's okay. If anything, I'll host another Zoom just to finish up what I'm trying to say if this one cuts out. But AUD CAD, so let's say you're shorting it, right? You have an 89.7% positive correlation. If you're comfortable with doing so, if your risk allows you to do so, you're welcome to take a trade on AUD JPY in the same direction. You're 89.7% likely to get it correct if they're going the same direction because they correlate, they move together. Okay? The main reason being, go back to the whiteboard. You guys don't know how these pairs work. AUD CAD. And AUD JPY. All right, so let's say it was bearish. This is why, okay? The main reason why this is how correlation works. The main reason these are 89.7% correlated is because the AUD is very strong against the CAD and the AUD is very strong against the Japanese yen. Does this mean the CAD and the Japanese yen are twins? No, okay? If you guys check out the indexes or the futures of some of these currencies, there may be a time where, for example, this Japanese yen could also actually be going same direction as AUD. But just so you guys know, just because the Japanese yen is also losing strength and the CAD is gaining strength does not mean that AUD JPY will not be going bearish, all right? As long as the base currency is losing strength, okay, compared to the quote currency. If you guys don't know the difference between a base and a quote currency, if the base currency is losing strength, it's bearish. If the base currency is gaining strength, it's bullish. It does not matter what JPY is doing. It does not matter what CAD's doing. Okay? The main thing is that when you're selling something as bearish is because AUD is probably the thing that's going down. Because regardless of whether AUD, JPY are both going down, okay, or one of them, like, you know what I'm saying, I could put it either direction. No matter what JPY decides to do, if AUD is losing strength, AUD, JPY will be bearish, okay? So that's why that's how you guys check out the indexes. They don't always have to go the opposite direction for you to be able to take a trade just looking at them. If they go the same way, that's double the negative. If they're both going down, they're going down together. They're both going up, they're going up together. Okay? That's how that's very important right there. So Going back into the correlations, going into the negative correlation, let's bring up the negative correlation. All right. Now let's bring up another pair. Okay, so look, for example, AUD CAD, Euro AUD, negative 72.5%. All right, so now I'm going back to the whiteboard. Negative correlation.
Yo,
Yes.
is it JK? Yeah, he wants to know.
Munoz?
Yeah.
Slide. Negative correlation means opposite direction, okay? So, for example, we brought up the AUD CAD versus the Euro AUD, right? AUD CAD bearish. Euro AUD, question mark. All right, and we have another text box, and that's negative 72.5% chance that Euro AUD bullish. And the main reason why is because what did I write up here about negative correlation? Opposite direction, okay? If it's a negative correlation, they go the opposite way. The main reason why, let's bring it up again one more time. I think we'll be good with the time that we have, not bad. AUD CAD. Sorry I'm not allowing for like questions. I hope I'm pretty much explaining it as simple as possible. Euro AUD. Yeah, if anything, I'll host another Zoom just for questions if anybody didn't get what I'm kind of going over right now. All right, AUD CAD bearish. All right, so I'm going to put, just for everybody can understand that does not matter what CAD's doing, I'm going to put both arrows, okay, on both of them. Does not matter. All right, main reason, AUD going down. Now, what does that necessarily have to say about the euro? Does the euro have to be going up for it to be going down? Probably not. But what is it about right here? Negative correlation. What does that usually mean? They go the opposite direction, okay? So if this is the case, it's highly unlikely, right? It has to go the opposite number of this, which is like positive, you know, what is that? Like 17, like a positive 17% chance that it's going to go the opposite way. Sorry, I'm throwing a whole bunch of numbers. Irrelevant. The whole thing is that AUD is going down, okay? If the AUD is losing strength and it is the quote currency, it is more than likely the base currency is going to be gaining strength against it, okay? So I'm going to, for the sake of not confusing anybody, I'm going to delete this downside arrow for Euro AUD. The whole point is that AUD CAD is bearish, and that is a negative 72.5% chance that Euro AUD is going the opposite direction. So that means Euro AUD has to be going up. Well, not has to, sorry. 72% likely Euro AUD is going to be going up while AUD CAD will be going down. Now, the main reason why this is very cool, because you can use some of these currencies to compare three of them without having to do the analysis for all three, all right? So there's a little technique that I got going on. I got three currencies, right? I'm going to pick some simple ones. AUD USD, right? Let's do USD JPY. Yeah, let's do AUD USD, AUD JPY, and AUD USD. Why did it just do that? Less than a minute? Oh, man. All right, so we might have to do one more Zoom. All right, hold on. I'm going to start up a new Zoom, guys. I'm going to start up a new Zoom. Same link. Well, it should be the same link. Actually, I'll update it right now.